bookkeeping to more CFO level, advisory level services to this industry. So we are specializing in the green industry. And today I kind of want to go over chart of accounts, cash flow forecasting, and SCorp versus sole proprietorship. So whether you're just starting your business or been in business for a couple of years, what I'm going to go over is going to be beneficial to you. But I will share this deck with Scott, and if you guys would like to review it after, you can ask him, as well as the chart of accounts sample. I'll share my screen here. Okay, so we don't want to talk about accounting, right? That's the last thing on our minds because we're always in the field, very busy doing everything else, and accounting and bookkeeping always seems to be the last thing on our minds. But I'm here to tell you that accounting is really the foundation of your business because your numbers tell the story at the end of the day. If your labor costs are high, then that means maybe you're not being as efficient as you can in your business. Advertising costs, could be a driver of revenue, so your numbers really are telling you how your business is doing. And it is the foundation. And that's why it's so important to keep track of your bookkeeping and accounting in your business. So accurate bookkeeping, it is the foundation. And having accurate bookkeeping and accounting is important because you will need it, to your financial statements to apply for loans at the bank for tax purposes, obviously at the end of the year. And then profitability, you want to know whether you're making money because that's why we're in business in the first place, right? And we shouldn't solely rely on our bank statement or banking app. I know that we tend to, okay, I have money in the bank kind of thing, and being like, all right, and then we're making these big decisions off of that number we're seeing every day. But that's just something short term, but we're trying to make long term decisions. And that's where your financial statements come into play. So another reason why you need accurate bookkeeping is because you want to create a financial scoreboard for your business. So you want to keep score of your business, similar to how you got your report card in grade school. You got an A, B, C, how you were doing in that class. So if you have your bookkeeping up to date, then you can take some financial metrics, percentages, and make a scoreboard for yourself. Better yet, if you practice open book management, you can show those financial metrics to your team members, get them excited, to increase efficiencies in your business, tie some sort of incentive to that, and then that'll be beneficial to you and to them. So let's go here. So first thing we want to make sure is to have your chart of accounts laid out correctly, whether you're using QuickBooks or Xero or any other accounting platform. And companies use chart of accounts to categorize everything that's happening, all the transactions within the business. So your revenues, expenses, your assets, liabilities, and equity transactions. And it is important to use the chart of accounts that is designated towards the green industry. Right now, I'll show you a sample chart of accounts here. And this is very simple. It doesn't even have numbers associated with it because, it always does have numbers associated with it, but just for the simplicity purposes, this is geared toward the green industry. So you have your bank, which is, checking a savings account. You have your fixed assets, and you have, your lawnmowers, your trucks, your trailers on there, your sprayers. Those are your fixed assets because those will benefit your company for more than 1 year of being in business. Something that you're going to use and it's going to be just used under 1 year, those are just regular expenses. You have your current liabilities in here, and that is, your sales tax payable, credit cards, payroll tax, and then equity section, and then you have your income accounts. And then this is going to vary depending on the services that you provide. So you're going to have your installation services here, maintenance, arbor, snow and ice. Maybe you do some fencing on the side. So it just depends on what kind of services you're providing. And then you're going to have your cost of sales, which is what is exactly allowing you to make that sale. So costs that are directly related to the sale. So then that's your field labor, and that's including their salary, payroll tax, and compensation, workers' compensation, equipment, materials, fuel for your vehicles and equipment, material costs, disposal or dumping fees, subcontractors, and anything other that is job-related expenses. So those, what is called your cost of sales, also known as cost of goods, but you're not really selling any goods, so I like to call it cost of sales. But then we go to your just regular daily operating expenses. This is your general and administrative. So marketing, that's anything for your marketing, computer and software, meals and entertainment, payroll, but administrative related, repairs and maintenance, telephones, all of that stuff is included in there. So the reason why you want to make sure that all your transactions are going into these correct buckets is because as you grow, you want to look at your numbers and you want to compare it to other companies in the industry that are doing well. So what are other companies doing? What are the industry averages? And then you want to take your numbers and benchmark it. If you have your equipment expenses going into, let's say, a regular expense account that says supplies, let's say, then that's going to throw off your gross profit. And so when you're comparing to industry averages, you wouldn't be comparing apples to apples. That's why it's very important to have all your transactions in the correct buckets, because it's going to give you more financial clarity. And like I said, I'll send these chart of accounts over to Scott if you guys want to take a look at it. All right, we'll get on to cash flow forecasting. So business owners who don't monitor their cash put their business at risk. 81% of businesses that fail cite that cash flow was the main reason. And with the seasonality of this industry, cash flow is even a bigger topic area. And it is one of the main reasons why small businesses fail, is because they're not tracking their cash flow accurately and not managing that. And so one of the ways to get ahead of the game and to give you a peace of mind is to forecast your cash flow. When we're forecasting cash flow, we want to do it for at least 6 months. So if you're forecasting your cash flow today, you want to do it from January to June 2021. And so we're forecasting cash inflows and outflows solely. So do not be confused with a profit and loss. That's an accounting document. This is just strictly cash in and cash out. What am I going to have at the end of the day in my bank account? So by forecasting out your cash in and cash out, you're going to be able to anticipate any shortfalls. So for example, if I forecast out my cash flow and I see that in March, I'm looking like I'm going to be at a deficit, what can I do right now in order to make sure that I have enough cash in March to cover my expenses? So you're staying ahead of the game and you're avoiding a lot of issues. Also, cash flow forecasting is great for assumptions. So for example, I'm planning to make large equipment purchases in April, Am I able to make that equipment purchase? Or I want to add another team member, another field guy, or another administrative person. Can I do that? Do I have enough cash to be able to cover their salaries? And so you could plug those into the model and see where you're at. Okay, so if you want to do it yourself, this is how you can get started today. You can use an Excel sheet, and you're looking here at a forecast on an Excel sheet for the next 6 months. Okay, so this is just an example, and I use the historical trend method in this example. For my clients, we use a more complex example, but if you want to get started and do it yourself, I think that this is a great method. Like I said, for my clients, we use the Float app, FLOAT, and it's a software that integrates with QuickBooks Online or Xero. It takes all your cash inflows and outflows and then puts it on a chart for you. So it's a more visual display, and it has other innovative tools within it. But like I said, if you want to do it yourself, if you're just getting started, this is a great, simple method for you to use. Okay, so you're going to have your Excel sheet, and first you want to start off by creating your columns. Okay, so like I said, we're in December, we're going to forecast out January, February, March, April, May, and June. So those are going to be your columns, your months that you're forecasting out. And then any cash in items. So receipt is cash in. So everybody's going to have sales that we're expecting to have come into the business. Maybe we have some loans that we're going to receive. So that's also cash in. Maybe we have some investment income. Maybe we have, maybe we're going to invest from our personal savings into the business. So that will also be cash in, considered cash in. So once you add all of the cash in items, you'll make sure that you have a total for each month. And then you'll move on to the rows for cash out items. So these items will include anything from, materials, salaries, wages, telephone, equipment purchases, like I said, any expenses that you're going to incur during those months, you're going to lay out on these rows. You're also going to have a total for all expenses. So now you're going to have a total for cash in, and down here you're going to have a total for cash out. Now you're going to have your cash flow surplus or deficit. And this formula here, all that it is your cash in minus cash out. So in this example, we can see that we have spent more than we received. So that's why this number is negative now. Opening cash balance. So your opening balance for January in this example is going to be your ending balance on your bank statement in December 31st. So that's going to be your ending balance. So for this person, they had an ending balance in December 31st of $15,000. And then we're going to take all their net cash movement, and then they're left with $3,800 at the end of January. And so if you see, then that becomes their opening cash balance in February, right? Because your ending becomes your opening in the next year. And you do the same thing. So now you may be wondering, but how do I come up with the sales forecast? How do I know how much sales? How can I forecast sales and expenses? So we'll go over that. So what you're going to need is for this example, what you're going to need is the past 3 months. So if you're starting in January, you're going to want October to December revenue numbers for 2020 and 2019. And the reason why we're using that those months is because it's the most recent. And what we're going to do is calculate the rate of growth, because that's the most recent rate that you're growing at, versus us just looking at like January 2020 and January 2019. That has already passed a year. So we want to look at what your most recent rate of growth is. So we're going to use October, November, and December if we're forecasting out for January. Okay, so for October, November, December, we're going to need those revenue numbers for 2020 and 2019. So for this company, we have October to December 2019 revenue of 30,000. October to December 2020 revenue of 52,000. The rate, the percentage change or rate of growth is at 73%. So now what we're going to do is now we're going to take the January 2020 numbers. So we're going to go back to January 2020. They had a revenue of 723 in January 2020. What we're going to do is we're going to take that revenue in January. We're going to times it by the rate of growth, the recent rate of growth. And then we're going to get the 1,250, which is here, which is the sales that we projected for January. And you're going to do this, you're going to have the same rate of growth, right? But you're going to do it for every month. You're going to use February 2020, March 2020. You're going to times it by this number that you're getting here. So that's how you project your sales. And then, obviously any loans that you receive, you would be able to anticipate what month you would receive those loans. So if you're expecting funds from loans in April, you would just plug that in, or you're expecting that, that sometimes you transfer from your personal to the business, on average, $1,000 per month, you would put that into the factor. Now for expenses, you will know that based on your financial statements that your expenses are a percentage of your sales. So that's how you would forecast out this number. You would just make it a percentage of your sales based on what your expenses percentages are. That's how you can forecast the expenses. Okay, so if you're doing this and you have your Excel sheet, you can add your assumptions in here. So in these rows, you can input a line where it says, okay, new guy on payroll or whatever you want to call it. And you know that you're going to pay that person $1,000 each month. So you would just plug that into, let's say you plan to hire them in March. Plug that into here, and then you can see where you're at with that cash balance at the end of the day. Can you do that or not? Like I said, if you have plans to purchase a mower, all right, I'm planning to spend $7,500 in June. Do I have the funds for that at the end of the day? Am I at a deficit? Maybe I shouldn't buy it in June. Maybe I should buy it in February. Is looking a little bit better. Maybe I should do it then, or January, so it really helps you make those decisions and helps you anticipate any cash shortfalls beforehand, right? Because when you're looking at your historical information, it's like, oh man, I wish I could have done something about that. I wish I would have known. But here, you're anticipating it. It's an estimate, so it's not going to be dollar for dollar, but it's pretty close. And this can help you enormously in your business because, like I said, you'll be able to anticipate any problem areas when it does come to cash flow, especially with the seasonality. So you want to also make sure that you have enough cash at the end of the day to support your slower month. You know that you're going to have slower month. What can you do now? how much cash am I left with now? How much cash should I set aside? You'll be able to know that. You'll be able to have a peace of mind during your slower months. Like, okay, I did the work. I set the money aside. I made a plan, and then can go from there. So a lot of you maybe started off as a sole proprietorship or are a single member LLC and are getting, ready to maybe switch over to an S corp because you're going to be into that revenue line where it just makes sense to switch into an S corp. So DBA, sole proprietorship, single member LLCs under the default rules of the IRS get taxed as a sole proprietorship. And so that means that you're filing a Schedule C in your personal tax return, your 1040. And what happens is that your earnings are getting taxed for self-employment taxes at a rate of 15.3%. And that's a pretty hefty rate. But when you're first starting off, it may not make sense to switch to an S corp because you're not making earnings, you're at a loss, or you're not making as much for it to be beneficial for you. So, but once you start making a net income, I would say of 30,000, that's the time when you want to switch over to an S corporation because you'll be saving money on self-employment taxes. Because in an S corp, you will have to run payroll for yourself. You'll have a payroll, designated for yourself. You get paid. 70% of your earnings will be run through payroll. The rest of the 30% won't be, because in an S corporation, you can have shareholders distributions. You can take money out and not have it taxed for self-employment taxes. That's how you will save on self-employment taxes, versus if you get taxed as a sole proprietorship, 100% of those earnings are subject to self-employment taxes. So, if you're getting, up there in revenue, I would say consider switching over to an S corporation. It's an easy process. You'll still, if you're a single member LLC, you'll still be considered an LLC, just getting taxed as an S corporation. All right. But yeah, so that was it for me. And I guess we'll move on to the question and answer portion, but this is our contact us here if you guys have any questions.
Yeah, if anybody has any questions, actually I'll unmute people. Thank you, Carla. I think it's very interesting. I think the cash flow is so important. It's something that we all need to analyze and look at, but way better, way more than what we do. Trying to unmute.
Yeah, and it's definitely something that you can just pull up an Excel sheet. As long as you know, like, the concept behind it, it doesn't need to be 100%. It's just an estimate. And just having that plan is way better than, anything else that you can do and anticipating those shortfalls.
That app you recommended, you said it was Flow at, is that correct?
The Float app.
Float.
It's, so FLOAT, Float. Mm-hmm. And so that's the software that I use to forecast cash flow for my clients. So like I said, that integrates with your accounting system and makes it very easy for you. It even if you didn't want to do it this way that I showed you, they can actually come up with forecasting suggestions. So they'll fill all of that in for you.
Yeah, so this software does it pretty much automatically for you. Enter everything as long as your information is entered correctly. So
exactly. So as long as your books are up to date, then the software will work. If your books are not up to date, it's just gonna be a mess.
Yeah.
So when projecting cash flow as a growing business, we're looking at larger jobs this year. Now with that, especially industry specific, most of the time it's a certain percentage up front, and then a certain percentage when the job is finished.
Right.
Now, as we started getting larger jobs, my big thought was, I think the only way I could really do it is to implement a progress payment plan into all of my jobs, so that I can still calculate it at a weekly or bi-weekly basis of how much is going to come in, even if we have larger jobs. Is that something that's advisable for those purposes? Does that make sense?
Yeah, so that's another method that you can do. You can create your forecast based on the jobs that you're contracting out now. So that's a little more accurate, but you also have to be more involved in your cash flow forecast, because you have to be updating those numbers. Like if you got a new job today, you have to plug that in, make sure that those numbers are updated for cash in. But yeah, if it's a bigger job, I would say 50% down always, and then 50% when you finish. So that 50% when you finish, if you're projected to finish within the month, you can add that in the next month.
Okay.
Yeah, that is advisable. Usually it's 50% down, 50%.
So the project that we're working on right now, I'm just in the design phase. And so we're going to be starting in February, obviously assuming everything goes right, but we're going to be starting in February in the shop building structures for the job. And then come March, we're going to be able to, hopefully weather-wise, get up to the job to do the work. I think the last phase of the job is going to be coming in April. So I think I just answered my own question, but just the progress, do the progress payments on it and set it up, and like you mentioned, just projecting and forecasting.
Could
Yeah,
you sorry to
I'm
sorry to cut in. Could you price it as like 1/3 down, 1/3 when the job's like, let's say half done, and then 1/3 at the completion, or would that screw up your rates of how you want to take in money?
No,
do like 1/3 to get the materials and start, and then
yeah. So what we do normally, if people are farther than a month out, we'll do 500 down until we're 2 weeks out, and then we'll do a materials payment of roughly 60% of what's left. And then if it's a longer job, then we set it up with progress payments calculated based off of the amount left. So if we're projecting to be there for 3 weeks, then we'll set it up. Okay, on this day, you're going to owe us another 20%. On this day, you're going to owe us another 20%. And then at the end of it, they don't have that much left.
Right.
Like I said, when I answered my own question, I think it's just a matter of me setting the standard for our company.
Yeah.
This is how we do it. So.
Yeah, and I know, Alec, you were having some trouble with that on Jobber with the progress payments.
Yes.
QuickBooks Online actually has a great progress payment invoice that you can make on there. So maybe if you want to consider just strictly, if you're going to do the progress payments, do those on QuickBooks Online, and then the rest on Jobber. That could be an idea too. Yeah, because they have QuickBooks Online has that functionality, and it's just easier to keep track of the progress payments one. Yeah.
Which brings up my next question. Is there a better time to switch the CRMs? I mean, obviously probably during winter off season, right? But that's.
Yeah. So like before the new year, or before you start your spring rush, for sure. You don't want to do it in the middle. Just too hectic.
Yeah. All right. And then also with the sole switching over from the sole proprietorship to the SCorp, obviously now would be the time to start.
Yeah, so when you want to switch over, that's a good question. So you want to switch over from a sole proprietorship or single member LLC at the beginning of the year in January, because the IRS only gives you until March to switch over. So for that calendar year. So if you want to be approved to be taxed as an SCorp for 2021, you want to switch over January through March in that year.
Okay.
Mm-hmm.
Has that changed at all with everything that's going on right now? Right? They're not.
No, I mean, they're not even if you do miss the deadline, they're not like very strict on it. You have to kind of write an excuse, like, I don't know, just I thought my lawyers were going to do it or something, but there's always a chance that they'll deny it for this year, and you'll have to wait for 2022.
Okay. Now, when switching over to the SCorp, is hiring somebody like a lawyer, I mean, is that recommended?
So lawyers can do it, or accountants, CPAs can do it as well, or it depends on each. Also, it depends on the state as well. Like, you can switch over for federal purposes, but the state also has its own rules for SCorp. You want to look into that too.
Okay. Awesome.
It's a fairly easy process for federal purposes, though. Let's say the state is a little more involved depending on what state you're in.
Okay.
Yeah.
Awesome.
So Carla, just a quick clarification. So you recommend doing that after they reached $30,000 a month in income? Is that correct? Roughly?
No, $30,000 a year in net income.
Net income. Okay.
I mean, it's not gonna be a bad thing if you do it beforehand. It's not gonna hurt you in any way. It just, the only reason why I recommend it at that point is because switching to an SCorp is more of a responsibility than being a sole proprietorship, because like I said, you have to start running payroll for yourself. You have to do your distributions. You just have to be organized and responsible with the payroll side.
Is there other tax benefits too, and also protection for your personal stuff?
Yeah. So if you're an LLC, you have that protection already. But if you were just a sole proprietorship DBA and not under an LLC, and if you switch over to an SCorp, you will have that limited liability as well, because you're leaving yourself open to any, if somebody sues you or anything, going after your personal assets when you're a sole proprietorship. So if you switch over to an SCorp, they can now only go after your business and not your personal side.
Or you can face us right before you do.
Yeah, I think that's a very important thing.
Yeah, for sure. Especially when you're at people's houses and stuff, and you have other employees there.
Okay. Is there a cost association with switching like that of
I'm in a meeting.
from the sole proprietor over to the sole corp?
Yeah. So for the S corporation on the federal side, there's no filing fee, but you will incur some fees, I guess, whoever's actually filing, whether it's lawyer or your accountant. But the state does have some filing fees depending on what state you're in. So I've seen it anywhere from $100 to $300 for the state, but it really depends. Some states don't have a filing fee.
Now, what about the costs associated with having a CPA do that for you?
Yeah, so I've seen some CPAs, what they do is they'll say, okay, you're saving X amount of money. This is the percentage I'll charge you for that. Or just a fixed fee. We just do $150 to switch you over. That's it.
$150.
Yeah.
Okay.
Yeah.
Well, that's important. I think a lot of people looking for CPAs associated with really high costs.
Right.
Which, again, you're my CPA, and just to let everybody know, it is extremely affordable. A lot more affordable than what I thought it was going to be. So
yeah,
that's why I ask. It's just some of the stuff you look at it and you think in your head oh, it's going to cost me thousands of dollars because lawyers and state filing and everything else.
And like I said, it can, because like I said, some CPAs say, I'm going to save you. This is how much we're going to save this year by switching you over. I'm going to take 3% of that. That's going to be my fee. That could be well over $150, right? If you're saving, so some CPAs do it that way. We just have a fixed price for everybody, no matter how much you save.
Awesome.
We don't take that approach. Yeah.
Protecting yourself personally, in North Carolina, I took out an umbrella policy, which protects that's the barrier between myself and whoever would come against me, be it personal or business. So they're going to hit that umbrella before they hit anything else of mine. And that's on top of the S corporation. The advice I got before I incorporated was start out as an S. So that's what I did.
Right.
So when we set everything up, I do have a CPA. He is tied to my QuickBooks account. I'm looking at QuickBooks to try to do what you're talking about, Carla, just kind of track and set up some systems so I can take care of myself and take care of my employees. And we can kind of, look at what we're doing and where we can make improvements. So really appreciate your help today. But yeah, that umbrella policy was a great peace of mind for me. I don't know about other states. I don't know how wide Farm Bureau is. It's a mutual. They were very good to me when my truck was stolen. They paid me retail instead of wholesale.
Wow.
Yeah, I was blown away. And they settled within 24 hours. So if there's a Farm Bureau in your state, I would definitely look into those guys. As far as what they were doing for me beneficially is that uh, they would insure first-year operators, whereas State Farm and other companies won't issue general liability like second or third year. You've got to prove yourself. Well, how you going to get proven that you're not a risk unless somebody insures you? So, yeah, the folks that'll take care of you the first year are definitely the people I stick with.
Nice.
Yeah, no, that's
Yeah.
great. That's great. And it's definitely important to have that general liability insurance in case something goes wrong, because you might not always have the cash to pay whatever the damage may be. So that's when the insurance comes into play and they'll pay that out for you, right?
Yeah. Okay. Another question. Strictly receipts. Do you have a recommendation for a digital platform or something that's easy for employees to upload, or do we keep them? Should we store them job by job? Is it extremely important to keep every single receipt? How long? Kind of a general tracking of those things. I know it's important for job costing and things like that. So
Right. Yeah. So for the IRS, you need to have your receipts for at least 7 years. And you need to have all the business receipts because in case they do an audit, they want to prove every expense on your books. If you don't have receipts, then that's when they'll look at industry averages, and you don't want that. So it's extremely important for IRS purposes. As far as employees uploading receipts, I recommend Receipt Bank. There's an app on your phone. You can have it for your employees. They can take a snapshot of the receipt. It can get filed electronically. And under the IRS, you only need to keep the receipt in an electronic method or paper. So as soon as you have it uploaded, you can get rid of the paper. So that's a great tool for employee purposes. As far as job costing, though, you can do that. You can set up folders as well and have it under each job. That way you can track the profitability at the end of the day once you're finished with that job.
okay. Now, a problem I've had digitally with storing everything is some weird feeling I get about my computer's gonna make everything disappear.
Yeah, no, that's a huge thing. Yeah, for
But
sure.
I mean, I mean, I guess we just back it up onto something else or put it into the cloud software.
Yeah, so Receipt Bank is cloud-based. So
Okay.
you'll have it on the cloud, but you can buy an external hard drive for yourself.
Okay.
And you can actually
yes,
take it from the
because Google
cloud,
Drive.
have it on
Is
the
that the
hard
cloud?
drive. So you have both. You have
Because
cloud
it goes
and on your hard drive
computers.
too.
Okay.
Being Google
So you
Drive.
have a peace of mind where, okay, I can pull it easily from Receipt Bank, or if anything happens with the cloud or anything, you'll have your hard drive on there strictly for receipt purposes, because it can take up a lot of storage on your computer, especially as you grow as a business, and your computer will always need that external hard drive.
Yeah.
I'll let you know, Alec, we had our guys, if they're out on the job and they go to like Home Depot or whatever, they have to snap a picture of it and send it to my mom, the secretary. That way they have a picture of it, because they always end up losing the receipts. So they don't have you don't have the software, just have them snap a picture of it and keep it on the phone and send it to you at some point. That's what we do.
Yeah.
Just because our guys would lose them, or they get blown away, leave the windows open in the truck and they get blown out the window. So
Yeah. Well, the problem I've come to find out, even with the younger guys now, is, they're really good at Facebook or Instagram or texting their girlfriends, but when it comes to actually like logging into Jobber and doing stuff, it's like, oh, dude, what's this square thing in my pocket? It's a pain. But no, I've been looking at something to combat that, so I can,
Yeah, there are other apps too that like send you reminders, like, you better upload your receipts today or at the end of the week.
Okay, awesome.
Oh.
That's it for me.
Jerry's
I've got a question for anybody about receipts. So just getting started over the last year, I bought a lot of things on Marketplace and paid cash for it. I didn't always get receipts, but is there a way I can just go through and like kind of on a piece of paper, write down, does that justify if I make a cash purchase? For instance, like $200 for a chainsaw, $200 for this or that. Does that constitute a legitimate receipt if I can go back and find out who I bought it from and put their name down or not?
Yeah, so on Facebook Marketplace, and you're buying cash, that's a good idea. I would say if you can go back and like get that person to like say it on an email or Word document, like, yes, you purchased this for me on this date for X amount of dollars, that would be a great idea. At least you have something paper. And I'm not sure with Facebook.
Because I kept track
Can
of
you
the
like
names.
see it on like Facebook, like
so,
alert, like you bought it? I think you can see that.
Yeah, so I saved it that way.
Save that and have them write you an email or a Word document saying that you had purchased it for that amount on that day.
Okay.
I would say both of those things would pretty much have you covered there on that end.
Okay. I know for big ticket things, if I was paying, $500 or more, I would have them just handwrite something. But for small things, I didn't always think of it for, like $100 here, $200 there. So.
Yeah, but it also adds up, the smaller.
Yeah, definitely. It quickly becomes in the thousands. Yeah.
Mm-hmm.
Yeah. I had a collapsible folder, Joe, and I actually printed up my own receipt. And so I print them off, because when I first started, I did the same thing. If I was out and about, I don't know. My grandpa was a contractor, so it was always, he's like, you better keep $500 on you at all times. You might run into a deal. So, but every time I bought something, I always had that on me. But
and then just sign or initial?
Word thing, yeah. I just had them sign it and say, hey, look, I just own a business. And you just sign it. I've never had anybody do anything. And then for bigger stuff, too, I'd always anything over $500, I'd go and see it, put down a small deposit, have them sign it, and then I'd go and get a cashier's check.
Okay, because that's the receipt right there
for the rest of it. Well, it's just
the cashier check.
The cashier's check came straight from the business account.
Right.
I felt better about it, but
so you're not messing around with like hundreds or a bunch of cash.
I know on market out a couple grand. It's like
I know. Yeah. Even when I bought a truck, I bought a dump truck, or I bought a regular F-350, diesel with a dump bed, and paid $3,500 in cash. But I made sure that, he had written up everything when I got the title and stuff like that. And I had asked him in advance if he would type it up, and he did. But it was good. But that was my biggest purchase ever where I used cash, a big thick envelope of $100 bills.
Right. Yeah. No, I just printed those off and had them on me, but.
Okay.
And then make sure you track everything too. If you're buying all that small stuff, make sure you write it all down, serial numbers.
Yeah. So I use Google Excel.
Or Google Sheets.
Google Sheets. My son helped me set it up over a year ago, and it works really well. And so I just record everything almost like a checkbook in the order in which I buy it. and it's got different categories. But I think I might switch over to QuickBooks. Is there like a specific version of QuickBooks that you recommend, Carla, or anybody? Or is there like a free version out there that you would say is just as good?
Yeah. For QuickBooks, you want to start off with at least the QuickBooks Essentials,
Okay.
which is $20 a month.
Okay.
I think that's the best one. They have a QuickBooks Self-Employed one, which is $7 a month, but it just doesn't have all the functionalities, and it ends up being more of a pain in the neck at the end of the day.
Okay.
So
Because I
it's
certainly want to be able to like categorize. That's what we can do here. Like I can look at all my fuel credits versus fuel and find out how much I'm paying, in that way. And the same thing
Right.
for, marketing and materials. And I've got different categories so I can real quickly sort and stuff like that. These are my
yes,
sons.
I would say. Hello.
Hi.
Cute.
So
QuickBooks
Yeah.
Online is kind of the
Sounds
standard, isn't it, Carla?
It is.
Yeah.
Joe, I found QuickBooks to be a big help in as far as getting payments,
okay.
because you can set up an option in your invoice for, they can use either a credit card or their bank account. It's their choice. And they put that information in, you don't.
Okay.
So the information's protected. You can have them pay you in 15 days, 30 days, or whenever you bill them.
Okay.
All you need is their email in. And so once you get I need your email to put you into QuickBooks so I can give you this paperless, invoice.
Sure.
And in this day of COVID, it's even bigger of an item.
Not worrying about that face to face.
Yeah. Yeah. So, we can really be contact friendly. So yeah, I signed up with QuickBooks Online beginning of the year, and it's been a game changer.
Now you use the essentials as well?
I can't remember the account. I think they charged me something like $20-$30 a month.
Okay. Okay.
Yeah, so I got a little bit more than just the essentials. I've got a good bit, and it ties into I use a CPA. My uncle was a CPA. These guys, that's what they do for a living. Carla studies tax law and everything else, and knows why you should file as a type S instead of a sole proprietor, and all these
Right.
other things that can help you out. I just came to this seminar so I could learn more about what I need to do on my end. So I'm tracking to stay profitable, because this is a career change for me.
Sure.
Yeah. So
Me too.
This is going from hobby to six figures.
Yeah. Nice.
2021.
I was lucky enough to file as an SCorp too. I had a good CPA my wife and I already took our taxes.
Yeah.
Oh, I'm sorry. Could you hear that?
Yep.
Okay. So a year ago, we filed as an SCorp as well with our CPA, who we've gone to for years, because we were both teachers for a long time, and my wife still teaches, but I was laid off in 2018. So I made this my primary business and stuff like that to help income. But yeah.
I was a music education major, still play.
Okay.
Oh, wow.
Yeah. I was art and English.
Okay.
Nice. One thing I will say is, when you're dealing with the accountant, make sure they kind of understand the contracting side of business. Landscaping is even better. Like Carla, that's something we just had a general accountant for years, and the way they did things and the way we needed to lay things out, so we actually understood could understand that information, was two different things. We actually had to kind of work with them for a while to actually get that things kind of laid out a little bit easier, as far as how we created our budget and what the report showed. So having somebody set it up properly from the beginning is a huge thing. So I just definitely encourage that.
Oh, I 100% agree. I just, for everybody else that's in their first year, second year, something that I waited for way too long was, software in CPA and bookkeeping, and those things are just as important as any chainsaw or rake or truck that you're ever going to buy.
Yeah.
So it's an investment. Like QuickBooks, a good CRM, a good CPA. But if I could go back to day one, that's the first thing that I'd be on board
putting
with.
money into
Putting money into it, 100%. It just makes things so much easier and smoother, and you know, I could have been in a very different place right now if I would have done this, you know, 8 or 9 years ago. So
Well, that and like how she went over the cash flow, understanding that is a huge thing. You can see
Yeah.
what you need to do. Hey, I need to go get more work now. Like it just
Yeah.
opens your eyes to what you need to do, and definitely encourage learning more about that if you're not familiar with it.
Yeah,
Yeah.
for sure.
no, and I guess just yeah, Carla does my stuff, and it's made it a lot easier to make decisions on things and to, you know, exactly see how we're doing, and it's been an eye opener for sure, and it's been great. So
Awesome.
All right. Does anybody have anything else? Any other questions? No? Okay. Well, Carla, we appreciate you taking the time to be here today. It's a lot of great information. And just so you guys know, I'll be putting this replay up in the Academy. It should probably be up this afternoon under the bonus section. So feel free to watch it again if you need to. So.
Yeah, thank you.
All right. Thank you, guys. Thank you,
Thank
Carla.
you for having me, guys. Thank you.
bye, Carla. Thank
Nice to
you.
meet you.
Bye. No problem. Bye.
Bye-bye.